Welcome to another day in the Matrix. This is Red Pill Podcast 134. Hope you're all having an amazing weekend and start to your week. It has been a wild week in crypto yet again since the past solar eclipse, and we're about a week out from moving into the upcoming lunar eclipse, and we'll be talking about all of that today. But before we get started, remember, get comfortable, get relaxed. Go ahead, grab yourself a cup of coffee or tea if it's the morning time, or a glass of wine or beer, or any beverage of your choice if it's the nighttime. Again, so grateful and appreciative for you tuning in today. It's been really amazing this past couple weeks, and I've been feeling really good energy lately and very motivated and inspired. I got out those new videos on the Expansion Mastermind course. So again, anyone who's a part of the Expansion Mastermind course already, no further action is needed. You just need to sign onto your account inside of my website, watersabove.com, and under the programs tab, you go to your course, the Expansion Mastermind course, and you'll see that I added a couple new sections, one of them being part 2, to heal thyself, a very important and life-changing chapter for many. It's part of my most crucial work I've released, and it was so fun to create these new videos and to add even more value to the health and wellness section of that course, as well as a new chapter called The Unity of Architects. I believe that's going to be very helpful for those that are interested in just overall the concepts of relationships and communicating with other architects such as yourself, developing partnerships, finding mentors, coaches, etc. And then it finishes off with a surprise update on what's coming in Q1 2024. I have so much to share on that, but we'll save that for another time. So before we get started, remember, if you are new here to the Wolfpack, first of all, welcome. It's so great to have you here with us. And if you need Discord access, just go ahead and send me a direct message over on Patreon with your Discord username and the last 4 numbers after your username, and I will reply back with a Patreon message sharing that Discord server invite link. Also, we're doing amazing with the altcoin voting system that we have going on. This week, we will be covering actually a lot of projects because we had a little bit of a breakout on eHex and pHex. So for the people in the Hex community out there, got a lot of them reaching out and asking me my thoughts about this breakout. So I'll be getting into that, as well as Tron, a new project I don't believe I've ever looked at called Osmosis, and then Aleph Zero and Compound. It's been a while since we've looked at Comp, so that'll be cool to get back into. And I will also be going over gold and silver because of the recent move that we've had and that back test that I told everyone about to anticipate. We did get a little bit of that action going on last week. Nice bounce into the weekly close. And then today we're seeing a little bit of red on precious metals. So kind of just recapping some of that. I've been very transparent about my personal portfolio lately and how I have about a 10% position out of my overall investment portfolio in gold. We decided to take advantage of that correction back some weeks ago, and we had a nice bounce since. So for those that are still interested in accumulation, I feel like going through this will be helpful. And I also feel that going over the DXY, the stock market, and precious metals in general, alongside the Bitcoin analysis, just gives us a really holistic overview of what's happening. And we must focus on these sorts of things so we can get more clarity of how this market operates. One of the things that I brought up in my last couple videos, including last week's Red Pill podcast, is how I anticipated crypto to start decoupling from the stock market, and that any bigger pullbacks that we should anticipate should actually be in the stocks. And now that we're seeing the way that crypto's been moving since our second solar eclipse of the solar cycle, then tuning into the NASDAQ, you see another daily candle close on the lows, which could be potentially breaking this horizontal structure right here at the 702 fib. That's why it's important, because we're seeing this decoupling is real. And when we look over at gold, we can see the same effect, shooting to the upside, actually retesting some prior resistance levels, but this is not moving in sync as it typically does. And that's why I think it's important that we take note of all of this. We could kind of get a little bit more fine-tuned in our overall investment thesis. And we're doing amazing so far. This has been incredible to watch. Some of these buying orders that I put in, as well as those purposeful losses that I took on those altcoins, I am doing it for tax loss harvesting. I was very transparent about all of this. Taking that capital and then flooding it into Bitcoin on that recent correction, flooding it into Ethereum and into XRP is working out very nicely, as well as that gold position that was built. So we're building the, overall structure and foundation of our portfolio at the moment. And then later, we're going to be moving more into venture capital, getting into the more speculative altcoins. And I hope you guys see the method to my madness now, because if you've been paying attention and how I've been looking at all of this, it's really just based on all the research and data that we've been taking into consideration based on where we are at in the cycle. We know that we were in the Shemitah a couple of years ago. We just recently moved through Jubilee. And during that time, we were fiat heavy. And now it's important to realize that it's the Bitcoin show. And you can't bet against the winning horse at this time. It's just the way the market moves. And whether you hate Bitcoin or love it, it doesn't really matter. Because here we're not maxis. We're just decoders. We're conscious beings. And we're looking to expand. And part of that requires us to be a unit of architects together. To be a community. So I love hearing your thoughts and your ideas, whether you're decoders, astrologers, TA analysts, traders. Feel free to continue to share where you're at in your investment thesis in the Discord. It's amazing to hear what everyone's up to and to see everyone collaborating. So let's get into today's episode. In the last podcast, we discussed Halloween, or Samhain, and the significance being the 44th week of this year, tied to all that decoding we discovered. And from an exoteric perspective, it's also when the next FOMC meeting is happening on November 1st. So that, of course, indicates it'll be a big week for the traditional markets. We're pivoting into that week as we speak because we have the traditional markets opening for the week very soon. As well as we discussed the date of December 13th, which happens to be the new moon in December, about a week out from what we're calling Saturnalia. That's a very critical time frame for Bitcoin and crypto. But we put a lot of emphasis on another date, which was November 13th. It's really interesting how these 13th dates are so powerful, but we will be going over that specific date a little bit today, just recapping it. But for now, let's pick up where we left off from our last Red Pill podcast to further dissect these solar cycles in Bitcoin so that we could see what we anticipate next for the overall crypto market. And we'll be starting with the solar cycle back in 2012. So I'm going to be going over to the Bitcoin chart here. Going to be turning off these moon cycles, extending out this chart a bit, and we're going to be looking at the first solar cycle here. Now we're at 2012 and we're just zooming in specifically to this time frame. We've been doing this a lot lately, just kind of isolating out this second solar eclipse of the solar cycle. And from this second eclipse to here, what we had was Bitcoin rallied 15% for 13 days, and then it had a short-term pullback into the lunar eclipse. I'll actually turn on the moon phases for now so you can kind of get a visual here. So here you have the initial rally, a little pullback into the lunar eclipse. We went up a little bit higher into the next month. Overall, we're seeing from this close upwards of right here about 15%. So we have those initial 13 days, then a pullback, 6% as mentioned. Then we had continuation into the next month. Now we're going to go to September of 2016, and we're going to see the same exact time frame, having about a 10% rally for about 10 days, then a pullback into the lunar eclipse. And this pullback was about 6% from the microcycle top. So we're getting a little bit of a theme. We instantly move up for about, let's just say, a little over a week to 2 weeks after the second solar eclipse. We got about 10% on the second iteration, about 15% on the first iteration, and then we followed that with just a short pullback, about 6% in both iterations, exactly the same pullback. Now, another thing that happened is we broke the previous microcycle top about 30 days later, and this is a quick note to take between these two iterations is in 2012, Bitcoin topped out after a 31-day rally from the solar eclipse, and then it traded sideways for 27 days, whilst here we had our solar eclipse, and then we were sideways initially, and then we broke out, and the rally was essentially the same amount of time, a little bit over 130 days, if I believe correctly. That's really crucial to consider because it gives us a long-term outlook, and it also dials into the short term. Well, you're going to see in a moment that what we're doing today is exactly the same as what happened in these two iterations. But just to let you know, this data that I just shared lets us be a little more aware that there could be a month where Bitcoin stalls out, either starting in transition into next month or perhaps into the new year, which would be November or December into January. I'll also share my personal thoughts on this later when we get more into the Bitcoin analysis. Now let's go over to the third iteration of these solar cycles, and we have right here this rally into the C19 Black Swan. Now, what's really amazing about this is we went up 17% into this lunar eclipse, and also about a 6% pullback if we were to go off of the closures. So it was about a 9% pullback if you wanted to consider the wick to the tail. That's amazing, guys, because we had one iteration in 2012, 15% gain, about 13 days. Then we had the second iteration, 10% gain, 10 days. And then here we are on the third iteration. We have a 17% gain in 13 days. It's almost identical to 2012. Then we had a pullback into the lunar eclipse. That was the same amount of pullback in all three iterations. Now, what this does is it just deletes all of this, like bro energy that we get from people that are like, well, Bitcoin goes up more because it has less market cap. And all of this, it's like no one is looking into the truth of the astrology of it all. And once you get there, you start to see you can have Bitcoin essentially trading alone back in 2012 with no other altcoins to influence. And the gains and the pullbacks were similar at these stages. Now, of course, in the overall from all-time low to all-time high, you're going to have diminishing returns, diminishing gains, of course. But when we're looking at the zoomed in version of it all, phase by phase, you can see that it's insanely cyclical. And anyone who's been following along here since the end of the Shemitah, throughout the whole Jubilee year, we saw Bitcoin do essentially what it always does. It was also the same thing from all-time high to all-time low, happening 1 year later. It's no different. So when we're looking at these solar cycles and this specific solar eclipse, that's the second iteration out of the cycle, we're seeing the same exact thing happen. And when we now move over today with Bitcoin, we're going to see it's also the same. So what we want to consider, though, is this one cycle had about a 60-day rally before it essentially being a bull trap, which led to a pretty nasty correction. This is on the table, of course, at any time. But I want people to remember that we're moving blockchain. The economy is moving in this direction. And I believe that there will be a Bitcoin ETF passed before any opportunity for the timing of this to affect Bitcoin. Of course, there's going to be alternative theories. Some people are going to think that, well, wouldn't BlackRock and ARK and all these big investment, venture capital firms, wouldn't they want to push Bitcoin down more to manipulate it? Yes, that's totally in the cards. What would matter most is what would you do if that moment happened. But I want people to remember that if that did happen, it would absolutely slaughter the altcoins. So it wouldn't be nearly as problematic as it would be for the altcoin holders. So I know that there's a lot of theory that's up in the air right now. There's going to be other analysts that share their truth on this. I'm going to stick to the solar cycle and what I'm seeing happen with Wyckoff. And unless I see some problems where we're breaking structure, well, I'm not going to go against the trend. I'm not going to go against over a decade of data that's cyclical and repeating itself with nearly, 100% accuracy and precision. Again, if it's not broken, why try to fix it? So getting back to this, we just want to take some of this data that we've accumulated so far, and we want to apply it now to what we're seeing now. So we're going to consider the data of how many days we moved up, which was between 10 to 13 days, and that being about an average of a 14% gain. So we're going to go over today. And what we see is from this right here, we're going to move up, and we're going to see so far how much we've moved up. And there we have it. We have about 15% gains in 9 days. Well, that falls in a perfect alignment with the third iteration and the first iteration perfectly. With that 14% gain on average, we're only at 15.4. We saw in one iteration going as high as 17%. That'd be a little bit higher than 31,000, but we've essentially hit it. And we're at 9 days. But remember, we have between 10 and 13 days. So that would be like going out to tomorrow. When I film this today, just imagine one trading day after you receiving this podcast would be the 10-day mark. That would be typically when we see that moment. Now, we also have about 13 days out, which would be somewhere around October 27th. And what we could see is something like this. Imagine I'm looking very short term, and we saw a pullback like that. And then on the 22nd, we wick up, and then we have an M pattern. Okay, we're really short term right now, but I just want you to imagine this. We could have something like this occur where we have a little chop and then shoot up, get rejected at the same level around 31K, and then we break this short-term support, and then we have our pullback that's going into that lunar eclipse that I mentioned moments ago. Now, we also know that our lunar eclipse tends to be about a 6% pullback. That happened on all of the iterations. We had about a 9% pullback if you wanted to include the tail. So you see right here is 29K if we move back 6% off of our current microcycle top. That's pretty much the same way my drawing looks if you're considering the wicks and the tails. It's pretty important, guys, that we see 3 cycles in a row moving like this. Now, structurally, we have something to consider here, and it would be something like this. I know that there was a little bit of weirdness going on, but of course we have volatility around new moons and full moons. We have a little bit of a support trend line that's seemingly in play. And if Bitcoin was to have the full 9% pullback on a tail, that wouldn't be weird for us to tap down into this trend line. And if we really wanted to go by daily closes here, it would be something like this. And that's also still very clean. Let me see where this would go out. No, kind of into no man's land. Any of this kind of stuff is in consideration right now. Using this pivot point was crucial because that is the March 10th crash that we had the black swan for retail banking with Silicon Valley and Silvergate. All right, I just want you guys to know, based on the timing of all of this, we've essentially topped out. Now, it's likely that we get a little bit of a pullback. The 6% pullback target brings us to about 29K, and then the deeper correction target would bring us to around 28K. And that would all be happening within the time frame of the lunar eclipse. And if I was to really look at dialing it down by the transition into the new month, by the FOMC meeting on November 1st, we should pretty much be out of that and recovering off of that 6% correction. Because one thing that I'll just give you information on really quickly, when I look at the pullback on the lunar eclipse, it's fast for Bitcoin. It's only like a couple days. Sometimes it's 1 day. With regards specifically to the second solar eclipse followed by the second lunar eclipse in the solar cycle. Doesn't give us a lot of time, but for me, I would definitely be taking action. So this gives us a pullback range of about 28 to 29,000 for Bitcoin. In that case, I'd be making another accumulation around there. That'd probably be my last one for Bitcoin for now. And I feel it would also be ideal for me to buy back some heavily discounted altcoins at the same time. So this would be the start of my quote unquote reaccumulation on these altcoins I sold purposefully at a loss just some weeks ago. Again, I did that for the purpose of tax loss harvesting to be able to offset my tax liability on the capital gains I have for the XRP profits I took back in July. And this move leveled all of that out for me. So it was definitely advantageous given my situation. And again, this is not financial advice. I'm not a financial advisor. I'm just being transparent about what I'm doing with my own plans, my own investment thesis. And of course, you need to do what's best for you. But always remember, create your plan, trade your plan. So we've reviewed all 3 iterations of solar cycles around this exact time frame we're in right now, passing through the second solar eclipse into the upcoming lunar eclipse. And we have clearly identified a pattern which gives us something to expect. But of course, we need to be open-minded to something different happening because anything's possible in the matrix. We always leave room for that opportunity. And it seems with a high likelihood that we have topped out in the microcycle for now with this wick up that we got today. We could, of course, potentially go a little bit higher into this week, just a little bit, because we saw a 17% iteration, which would be a little bit more, $31,400. That's just a little bit more than where we got today. And effectively, it would still be within the yearly high so far. Yep. So it would be right here. And we've already had 1 rejection, 2 rejections, 3, 4, 5 total rejections at 31,400. So we have room to get rejected back up there one more time, a little bit of a pullback, and then we should be breaking through the yearly highs, making new yearly highs by early to the middle of November, around the November new moon. Definitely by the December new moon, but that November new moon, it would be likely that we start to break above 32,000. So again, that's all based on data. Remember, the upcoming lunar eclipse on October 28th is connected to the start of the C19 ritual on March 11th of 2020. We're going to quickly show you that data. Got 3/11/2020. And we're connecting it to October 28th, being 3 years and 33 weeks. And then we have 2 days later, being the 303rd day of this year. And if you include the end date, you'll see that it is 3 years, 33 weeks, and 3 days from the 303rd day of this year, and March 11th being 3 times 11, which is 33. This is all connected to that 333 code. And we know that Monday, October 30th will be starting, the 44th week of this year. I also want to show you that this is connected to the March 10th of 2023 date. So we're going to go to 2023, March 10th. And you can see between the day Silicon Valley Bank failed and this year's 303rd day of the year, these 2 events are connected by 33 weeks and 3 days, 333. And in my last podcast, I told you all about this time frame of Samhain and Halloween, All Saints Day, Dia de los Muertos. And of course, those who are curious about 333, and you just want to know a little bit more about the code, 333 is the Ascended Master. 333 adds up to 9. This is the number of the ego, number 9, because it's the number that always comes back to itself. The Ascended Master has gone through the process of healing the damaged ego, something I talk about a lot in my live streams. This process is an incredibly vulnerable period of one's journey because it requires one to move on from the whole right and wrong game, the desire to scale everything. I call it scaling syndrome of the weak ego. You begin to see things as circumstantial, when you make it here. And you're willing to be curious about every experience in the present moment, in the now moment. Instead of dominating every situation with your beliefs, your opinions, and your ideas, you become playful, curious, because that's where the inner child is. That's where Source speaks to you. Anyways, moving on. But if you guys like that style of stuff, we are going to be going deep in my new course that'll be coming out, the Decoding Mastermind. And I'll let you all know about that more when it's ready to launch. And earlier, I brought up the date of November 13th. Just a quick recap. It's probably the craziest find specifically to Bitcoin. And again, just a quick recap. We have the 13th of November. We're going to be tying this to Satoshi Nakamoto's birthday this year. And you're going to see that they're connected by 223 days. All right. This is so powerful because 223 is the 48th prime number. You can see that right here. And this was the day Satoshi turned 48 years old. And this is the day that leaves 48 days left in the year. And 223 is also the year that we're in. In numerology, you would write 2023 as 223, removing the zeros with the rules of numerology. So this is an insane gem, and it'll definitely be interesting to see how that day goes specifically for Bitcoin. And around that time aligns perfectly with when Bitcoin was at its lows last year and at all-time highs 2 years ago. So we know this time frame is crucial for Bitcoin. It's tropical Scorpio, or the transition between sidereal Libra into what becomes Scorpio, from the scales to the scorpion. So November is always important for Bitcoin. It's obvious also in the charts. Even for those who don't care to decode, you could just see that the month of November is powerful for Bitcoin. It's also powerful for the overall markets. Remember, we were looking at this chart, Bitcoin seasonality, average monthly performance, and November is the best performing month for Bitcoin. And we also have this month of April, which is fascinating because I've been telling everyone that April of 2024 is really that crucial month for Bitcoin and for cryptocurrency. We have that April 8th eclipse next year. That'll be our third eclipse in the solar cycle, and that's a really positive time frame for Bitcoin typically, given any black swan events. And we know that moving into Q1 is powerful for an election year, and we're moving into an election year. We're still currently in that pre-election year time. So November is always important for Bitcoin. We have the data to show us. And earlier I spoke about the number 9 and the significance to that by the code. Well, that's what November is. Speaking of November, Novem in Latin is 9. Let me just show you by the code. I thought this was really funny. Novem is 69 in English ordinal, and why I think that's so funny is because we've been talking about that number 96 and 69 all year. Bitcoin's current all-time high is $69,000, and it hit that all-time high in the month of November. What? We'll call it that a coincidence, seriously, because I was just playing around with the decode, and I laughed when I saw 69 in Novem. Anyways, so November seems to be the key transition month for the occult. You have it starting with Samhain, and then it transitions into the 10th month, December. Dechi is 10, deci, like decimal. And with numerology, you know that 10 just becomes 1 again. And that's why Ophiuchus is crucial in all of this from an astrological standpoint and also from a decoder's, realm. And let me just show you quickly by the code that Ophiuchus adds up to 44 in Chaldean. We've been talking about the 44th month so much this year, and Ophiuchus is considered to be situated between November 29th and December 17th, right into Saturnalia. We'll touch on Saturnalia closer to December, but this 44 find with Ophiuchus really connects a lot of dots for me, especially with that small decode that I shared a while back about Jay-Z's last solo album called 444. They are all into astrology, numerology, gematria when they get to that level. You might think these celebrities are stupid, but a lot of them actually know the secrets of the universe, and that's why they show these hand symbols and they make content. Even their music videos reveal a lot of stuff. They have handlers, of course, but they know. And I think this number 44 and 444 are portals, really powerful portals. And we're approaching the 44th week of this year next week. So this is a perfect time to move into the charts and see what's happening in this setup for the week. We're going to review the move on gold and silver really quickly, since having another bullish week in precious metals while the stock market continues to correct, which means we'll be checking in with the traditional markets as well before getting into the charts, before getting into the crypto charts, excuse me. So we can see how this all transpired since the last couple videos I've been sharing, that I anticipated a correction in stocks and I felt that it won't affect crypto, and that's how it turned out. So again, this isn't about taking any credit or saying that I called it or anything like that. It's just we're here to recognize patterns, and there's been a clear pattern at this stage of Bitcoin's cycle. So it's important that we don't try to go against what continues to happen in the data. And the reason I saw that it was going this way was because of how Bitcoin typically reacts in solar cycles. You guys know about this. Just a final thought really quickly. We're also in the process of the economy shifting blockchain and the tokenization of the stock market. And I believe Christine Lagarde recently just came out to sort of confirm that they're in the first stages of a CBDC in Europe. I watched a little video of her where she tried telling us like 7 times in a 1-minute video that don't worry, cash will stay. Clearly there's a lot of pushback. Like, people aren't ready for the cash to go away. They feel like that's gonna, be whatever, conspiracy over conspiracy. I don't really care at the end of the day, because most of us are using digital money anyways. When you look up the way that money operates in the real world, it's almost not physical at all anymore. I bet most of the money that is still physical is probably being stored in like offshore accounts. And, like when it comes to the 99%, the populace, there's very little cash that's circulated by us. We're mostly using credit cards, tap to pay, Apple Pay, PayPal, Venmo, even crypto, right? So we also have that conversation of the Bitcoin ETF that's about to be approved very soon. And all of this is adding up that we're moving more digital. We're moving into the Aquarian essence. So all of this exoteric information can be considered for our overall investment thesis. And that's why it's important to realize what's going on right now in precious metals, what's going on right now with stocks, and the setup for Bitcoin with this ETF and how it could affect the altcoins. We have ISO 222 coins as part of the conversation. What makes our community so special is that we're looking and considering all of this stuff. So let's get over into the charts. We're going to quickly review gold. We're not going to spend too much time on it. We went over the basics on what's going to happen with Bitcoin, so we don't need to talk about that later, but we do have an idea. Essentially topped out, 6% correction, then continuation into the next month. Boom, boom, boom. All right. Okay. Now, what did I say last week? I said, look at these 2 trend lines, this blue trend line and this white trend line. We popped up right there on Friday the 13th. We made the podcast during this day. What I said was, look at a back test. And we got the back test on both of those trend lines at the same time. If I zoom in, this was your resistance trend line, descending resistance. We got that on that candle. Then we had this support that we broke through to have this spring. And we also back tested that 2 days in a row before we saw this continuation candle on Wednesday. That's massive. So we broke straight up. We've effectively had a daily close at what seems to be a resistance level. We know we're not making really any party time until we start getting dailies above 2,050 per ounce. But that move was crucial because we got a wick that broke structure over here. So not only did we go lower and deeper on our correction, but we sprung back up higher than our prior lower high. So I just want you to consider, we have the current yearly high, followed by lower high, lower high, lower high, lower high. Well, here we broke through structure, and that's an uptrend. So this is confirmed uptrend, and this is confirmed bear trap. Like, this was one of the best calls that was made here, really. because this asset is like not really on many people's radar at the moment. And I've actually been spending more time than ever doing TA on gold and finding out that it's helping me get better at TA in general. So I'm glad that I shared all of these ideas, and mostly I was considering it for my own portfolio, and that I took action on this correction between 1830 to 1810. I wrote out a message not only on Discord but also on the Patreon talking about those targets. We nailed those targets, and then the buyback has been amazing since, even breaking structure. So I would like to see gold chill out for a moment, maybe settle at the top of the 786. And then once we start getting back above the 888, we'll see how it acts. Because when I zoom out, we have all the way going back to 2020, pretty much the C19 moment, to today. You know, we're over 3 years at this point, and I think it's important that we need to start breaking tops, and we have this triple top energy, which is bullish if we can break, and that would require, you know, not just price discovery with a wick above 2070, like to actually start getting weekly candle closes above 2100. I think right there it would just signal like all of this FOMO energy that's probably been waiting on the sidelines because of this choppy horizontal structure that's been going on. And believe it or not, if you really look at what gold's been doing, this has been shaking a lot of people out. Look, you have your top, you have a little bit of a selling climax, automatic rally. Then you hold structure with higher lows, a double top, and then broke down perfectly into this Shemitah time frame, perfectly timed. Then a rally right back to prior all-time highs, triple top. That's really elusive. And then this recent correction, insanely elusive. Look at how parabolic it's gone since. So gold is like shaking everyone out, man. Like this is really an impressive mover, even though it's just gold. It's really wild for someone like me with my level of, TA skills to see. So anyways, yep, we're still calling this $2,400 gold in the year of 2024, moving into 2025. I think that's a high likelihood given, let's just look at the move from where we are today. That'd be 21%. Let's look at off the this is the end of the Shemitah time frame to current high. It's 28%. So we could definitely make that move. It would just be about 30% off this recent correction that we got. And this might be the deepest correction we get on gold. We'll have to see, of course, because gold and precious metals are a little bit more locked into the stock market's movement, because overall they're the same type of speculation. The same type of investor is interested in either of those. Whilst crypto investors tend to be a little bit more, digital, a little bit away from that type of stuff. They're more maxis in that regard. Anyways, getting back to this, gold at the time, we just want to look for this 888 fib to get some weekly closes. And then ultimately, I want to see weekly closes above 2090. And I'm not going to talk about gold or silver now for maybe a couple more weeks because we've already made the big moves that we've needed. Unless we get a deeper correction, I might buy a little more. We'll see. Now moving over to silver, just a quick analysis on this. We have this main trend line. We'll stick to this trend line for now. Getting a weekly close above that isn't everything. We actually want to break structure. So we want to see something above $26. Ideally getting back to $27.5. So $27.50 would look clear to me that we broke this descending resistance line and we're ready to start pushing up into prior all-time highs, because gold is sitting at all-time highs, but silver's down from 48. So silver has a ways to go to retest all-time highs. Clearly a lot more opportunity in that regard. But yeah, if you're going to hold physical, you just have to think about it. Obviously physical is a whole different ball game. If that's your game that you're into, do your own research, figure out what's best for you and your flow state. All right, now we're going to be getting over into quick stock market analysis. Because of the timing of today's podcast, we were able to still get this taken care of before the weekly open, and that's nice because I still got you guys prepared in advance, but I believe by the time this uploads, it'll be right around open. Needless to say, we have this 3% correction on the weekly in the NASDAQ. we had about a 3% correction a couple weeks ago. And if you're just looking at weekly candles, we've effectively closed another lower low on closures. So we have here our low, and then now another lower low about 2 months later. That's showing like a bull flag to me. So unless we break below the 618 target, we're bull flagging, and that could actually be really positive for the NASDAQ. I mean, I wouldn't even know where to start this staff from. Like I would feel conservatively pulling it here. But this is just madness if this really plays out. Like if there is no other corrections, let me turn this off and just half staff it. I mean, if we can make it till February. Jesus. Yeah. I mean, really insane. I'm not that bullish, man. I'm really not. This is likely to break, but we'll see. I mean, they can just continue to keep this market up as long as they would like. It's all fake anyways, right? So, who cares? Who cares? I mean, what does it matter? When I watched this rally all the way from the end of last year to here, I gave up forever on this idea that any of this will be for the people. Like, none of it is this is for the elite rich who are aware of the way the market's going to move months in advance, you know? And I was calling for this golden pocket to be tested into this relief rally we call an automatic rally. It's typical that we get the golden pocket. This thing shot up all the way to the 888. I mean, fuck. Crazy. You guys remember those podcasts as we broke above the golden pocket? I was just like speechless some weeks. I couldn't believe it. Anyways, we're starting to get some pressure now on the downside. So many people were like, we're bullish, it doesn't matter. Black Swan, this and that. You know, I mean, we have all of this stuff going on, and it's making people lose sight of the big picture and to slow themselves down like it's needed to when you're analyzing the stock market. So what does Waters mean by that in plain English? All right, we had our Black Swan event. It was the Israel conflict. This is clearly a Black Swan ritual because it's 50 years exactly since the Yom Kippur War. And we're just about 1 year out from another war theme of Russia-Ukraine. And every body is just like going along, you know, like with it all. And they're disregarding like the effects of how this is all going to happen in synchronicity, harmoniously. So what I'm trying to say here is that this has already started to topple. And that war theme, it's positive for crypto, but I do not think it's positive for stocks. It's not positive. So we're just starting to see some of the pain show up. But if you think July was how many months ago, guys, and we're perpetually getting lower highs and now technically lower lows on weekly closures, this is the start of bigger corrections. So I just want people to see. And really the only reason we focus on some of this stuff is because I know people are interested in it. Mostly we're interested in crypto though. But what we're seeing happening right now with these traditional markets, I mean, it's a sign that there's weakness. And when we look over to Bitcoin and how it just continues to repeat its cyclical, you know, kind of solar cycle vibe, it's going exactly how we see it going every time. So I just want people to be aware, you know, it's special when we have data like this in advance and we could prepare ourselves. Most people have no idea. But we got our Black Swan. We have more war themes to come. For those people that are affected by it, that's really unfortunate to hear. You know, they don't care about the stock market right now. Their whole life is affected. Some people don't even have electricity or like running water, you know? So how will this Black Swan effectively affect markets? Well, we're seeing it. We're seeing it unfold. We saw this insane push down on gold for absolutely no reason, about a 7% correction? Yeah, look, we got about a 6% correction, 2 weekly candles. You see this. Then right into the conflict, right into the day, we see pivot out perfectly. Do you not see how manipulated this is? That's your black swan. It's push gold down, buy it all up, then engineer a crisis, then push it back up. It's all bullshit. They did the same thing with Bitcoin. This is the way the world works, family. These things do affect the markets. It's just happening in a way that's nuanced and sophisticated, and the average person is always waiting for some like crash. But it's not that way every time. It happens in a very, I hope that people have learned now how this really works. And I know a lot of people that have been paying close attention to what we're saying here on this channel, you get it. And if you're ever confused, ask questions to the community. That's important. So what we're seeing right now is weakness. On the daily, we're only hovering at the 702. Let me quickly just take this out a little bit more. It's really this support here that if we break and we test on the 618, we want to see how that interaction is below 14,000 on the NASDAQ. And then it's this red line that's crucial because that is the current peak to retest after you have an automatic rally, specifically there. And you can tell because once we broke that level here around May into June, we just went straight up after. And of course, this is in sync with the 0.5 fib, which is typical because when you break above the 0.5 and above structural high, that means dead cat bounce is no longer in play. Very positive, very bullish. So that's why you have this effect. And for me, I would still anticipate a correction down to here, but if they just want to keep this market moving up, I mean, whatever, right? What would be interesting, though, is if the FOMC meeting comes to pass, we do see a deeper correction down to like 13,700 on the NASDAQ, and then we see Bitcoin hold. That would be really wild because that would definitely prove without a shadow of a doubt what Bitcoin does around this time is 100% governed by solar and lunar eclipses. So quick look at the S&P, got some W energy potential, but for me, I'm more bearish. So retesting here is, not strength. So one more swoop down to this level at 4,188. We're pretty much there. Yeah. Also note how we've broken below the 618 2 times over here and currently. So coming back down to here is pretty much as expected. Very soon. Let's look at the Dow. Same story on the Dow. We have a break below the 618. We also have this 0.5 fib level incoming. That would be somewhere around 32,600. And it would hold structure because we have our low, higher low. That would technically be your third higher low with pretty similar timings in between too. So if you look, we're looking at about 160 days. And then, yep. Let me see off the edge. Yeah, about 200 days and then off the first test. A little bit shorter, but it does seem pretty well spaced out about the extremes. Same thing with peaks to peaks. Over here, it was very clean, very zigzaggy, and every single top was pretty well spaced between every single bottom. So yeah, I mean, if we were to see a push down for the NASDAQ into this 618 fib, I would assume it will be in alignment with a retest of 4,180 on the S&P and the same thing with the 0.5 fib on the Dow. So take note on that. I'm not going to cover the stocks and gold for the next couple weeks unless I need to. I want to speed up the next couple weeks episodes because I want to really focus back more on the crypto story, especially at this critical time with our lunar eclipse and how this could be the last big pullback for Bitcoin before another rally up, and a new yearly high. So just you understand now why for the past month or so, I've been putting a lot of energy into sharing all of this stuff with stocks and gold. But for now, I think we could take a little break and get back onto focusing solely on the crypto. So let's look at Bitcoin, just continuing up. Bitcoin is really, let me see, is it 53% dominance yet? Ooh, close. Where do we get? We got 52.7. We're close, man. So I was calling for a 54 to 56% dominance potentially by Q1 2024. I'm sticking to that. I really think we could hit that 54 even by the end of the year, around Saturnalia, maybe even sooner. And that 1618 golden pocket for sure. That fib is pulled from here, by the way, down to this swing low. And you see how long we were in that horizontal trading range for? Effectively 2 years. All right. Then when we broke out of it, look at that back test on the 1 right there. So look, we broke, came back to exactly the prior high and then bounced, and then lately we've made a new higher high, which confirms continuation. So 54.4 is in the cards, and that means Bitcoin will gain strength. It will gain price. Also, a lot of people talk about the whole like paired in Satoshis versus US dollar. Like that doesn't really matter much anymore, because everything is more dominant in consideration of the fiat pairs. It's only in really small wallet holders that we're talking about Satoshi value. Most people, or unless you're a trader, of course, most people don't do that anymore because they don't need to. See, back in the day, you needed to trade Bitcoin for all the other cryptos, but today you don't. Today you could buy ETH with USD. You could buy VeChain with USD. You could buy Dash and Monero with dollars. There was a time where that wasn't really the case, where you needed Satoshis for everything. Also around the time of the height of the black web, dark web as some people call it. So you get where I'm going with this. Now today, the on and off ramps are so much more, and you don't need to get so Bitcoin heavy in order to be an altcoin investor. It's just simple now. Even with the invention of stable coins, you see that now you could just hold stable coins. You can buy really whatever you want, and because stable coins fixed at that $1 value, people feel more comfortable holding those than this super volatile Bitcoin asset in order to trade in and out of. Now, I'm not saying that it's bad to trade alts for Satoshis at all. I think that's a very good strategy depending on where you're at with your investment thesis and your trading plan. But I'm just letting people know. At this stage, Bitcoin gaining dominance means that when Bitcoin goes up, it's going to really help Bitcoin's price. And if Bitcoin starts to stall out, it could be beneficial for altcoins at that moment. But as long as Bitcoin moves up, anytime that it moves slightly down, it will hammer the altcoins in USD value and fiat value. Just keep that in mind. This is why during now, all the way up till the Bitcoin halving, we tend to see altcoins don't catch up as much as we tend to see in something like, Chainlink is effectively breaking out. I probably shouldn't cover that too much today, but I just noticed that I haven't seen a $10 link in some time. So yeah, we are in the process of moving up into a macro automatic rally with Chainlink, and it broke this almost 2-year structure. Amazing. Okay, that's really good to see. Finally, we're going to start to see this sort of energy kick in for a lot of altcoins, I believe. Isolated altcoins, of course, those that are tied to Saturn. Yeah, that's probably going to confuse some people. Okay. Chainlink is a Saturn coin. It has a hexagon as its logo. Hex, same sort of breakout energy right now. Again, we're moving through the eclipses, guys, and these are Saturn positive. I have so much to share on the decoding course, but I've been trying to work on a lesson where I expose that the eclipse is Saturn. It's not the sun and the moon. It's the ring. The Lord of the Rings, man. This is going to be mind-blowing. I can't wait to share all. Okay, I can't jump around too much. We're late in the episode. We got to get through this. So Chainlink, killing it. A little bit of a breakout. Nice back test at 7. I wasn't even anticipating that. I'm going to do a quick note. Chainlink. Quick thoughts. Hot takes. Let's get over to Bitcoin, man. Gotta love these podcasts. All right, so Bitcoin doing great, breaking out again on another daily candle. We're looking at about 7 days straight of greens. I want to look at this bi-weekly close that we just had. I'm sure it's very strong. Let me turn off the noise, and there we go. So we had our bi-weekly close, effectively still a lower high, but pretty good, about 7%, which is up from the prior bi-weekly candle at 6%, making progress. Really, nothing negative to say here. I mean, we're above 50 in bullish control, breaking slightly above prior peak, not doing anything crazy just yet. MACD in positives, histogram green. Yeah, this is looking beautiful. Let me look at some of the moving averages on this biweekly. Ooh, okay, big indicator right here. That white moving average is the 55 simple moving average. Getting that biweekly close above that would be ideal. I suspect that could be in the cards before the next new moon. So that would be before November 13th timeframe. Now, what do we want most? We want this yellow to cross above this white. That would be a wolf cross on a very big time frame on a biweekly. So if we can see any push above 32,000 into the 0.5 fib and effectively back into the golden pocket, which could take us into the end of the year, you would see that cross come in. That's a big cross. I mean, really, we could see one happen back here. We maintain the cross all the way throughout the next bull run, even with this black swan involved. When we have the black swan, we looked to the 200 exponential moving average on the weekly chart. Now, what that shows us is Bitcoin potential of 20K. If we were to have like a flash crash, really harsh crash, and if we wanted to entertain that this 200 simple was a possibility, that would still hold higher low structure. I've heard some theories of people talking about like an 8K Bitcoin or 10K or less Bitcoin given some black swan that they believe will happen. Yeah, I'll leave that up to those people. For now, that's not my analysis at all. Let's go to the weekly. I could see, this could be potentially a new weekly closure high. So if we can get through this week, I don't really know if I would consider that too much, but just we are about to close a higher weekly candle in the following week. If we could just maintain these levels, obviously if we could get to 31K on a weekly close, that'd be brilliant. We're above all these key moving averages. We can see a positive slope on the 55 simple. We have above all the EMAs. I mean, EMAs are in bullish posture with the 13 above the 21 above the 34. What can you say bad about this? Seriously. Look at the 5-day just looking beautiful. EMA's in positive. Got the wolf cross and above the 200 exponential. Okay, so we have this 200 simple above us, about 34.4. Let's see where that aligns with the fibs. Okay, so 34. Oh, right. That's super interesting. Okay, I want you guys to pay attention to this. This was the prior support line that we talked about for a while, since the beginning of 2023. We were continuing to come down to it, but once we had this eclipse back, we had this break here in August, a retest at this horizontal level of 25, and then I just kept the trend line and I extended it to see, will it eventually become a resistance on our next move up? And that tends to happen, right? A prior support could flip as a new resistance. And I find it interesting how the 5-day 200 simple moving average smacks right into it. So that'd be crazy if that is telling us that we could be moving up sometime to like 35, 36, and then get rejected down and maybe come down to the 0.5 fib for like a month or two. That's very normal. Remember, I told you that Bitcoin has done this in the past where it let's just say for the lunar eclipse, we come down to like 28, pop back up, and then like a little back test here on a new yearly high, come up, and then reject off of it, and then just trade sideways for like till March. That would be crazy. And we build support on top of these prior resistance levels here. You know what I'm saying? Right here, where we're struggling right now. Because what I think some people might be assuming is that we are making a head and shoulders. You guys let me know. I don't follow any other analysts, so I'm not really sure what they're looking at right now. But some people might be assuming we're making a head and shoulders, and if we were to break structure up here and do this move that I shared, this would be no different than what Bitcoin usually does, moving up into the third solar eclipse and having some stall outs in between, like no true price discovery energy until we get through the next Bitcoin halving, which would be somewhere over here. So it would be around here that we would start to anticipate, the prior let's just call it like this range, somewhere between 40 and 50. That's where we would anticipate getting back up to there. Now, one thing we could also do is look at from the eclipse to about 150 days to 130 days. That would be, yep, wow, that's brilliant. So literally this time frame, we could be getting back there into March, this zone, into the next eclipse. Amazing. Oops. What the hell did I do? Okay, whatever. I think it's fixed now. So yeah, I was just sharing some of my thoughts on this and the idea. Could potentially be moving up short term even, or maybe at December, get rejected off of 40K, get that yearly high in, and then roll over, chop sideways for a little bit at around 33K. I like that idea. You guys should take notes on that too, because it's something that I'm just kind of going intuitively along with. But it's plausible, very plausible. This prior trend line could be effectively an area that we gravitate to, especially when I see that 5-day 200 simple perfectly there, just right in alignment with that. Let me look at the 3-day. Yeah, we're just rolling on up. I mean, looking real good. This 3-day effectively closing at a new 3-day yearly high. I mean, there we go. And the dailies, we have the daily high. It's sitting around 31,500. So anything above 31,600 would assume that we're moving up to the 0.5 fib around 32,800. The RSI I need to look at though. What's going? Okay, yeah, we're getting into overbought. But Bitcoin, I mean, real devastating overbought levels could be in the 90s. Yeah, we have here, like back in 2017, we're looking at about a 93. We have this daily getting into 93. We have over here tapping on 90 in January 2021. We have a bunch of taps into the 88 levels. We have over here about 89. So once it starts getting above 87, that's where we would start anticipating a little bit of a correction, especially at the speed of which it goes up. And that could totally happen this year. Like at the end of the year, we just get gravitated up really fast, kind of do what I was talking about before. Maybe a rejection right below the 618, and then kind of just hold some structure. I kind of want a flash crash though. It'd be kind of awesome to see, because deep down in the bottom of my soul, I want a shitcoin washout. Like I really think that that's a beneficial thing for the overall crypto markets, just to get all this memery to go away. So I'm by no means anti flash crash, black swan isolated to crypto. I mean, I just don't think it would affect Bitcoin, XRP, IOTA, HBAR, like the ISOs. I don't really think it'll affect those as dramatically as it would the things like, Shiba Inu and fucking Pepe coin. All right, let's move on from this analysis. You guys generally understand the pullback level. We have the daily 200 simple perfectly at 28,000. That would be your more dramatic pullback of about 9%. We talked about that earlier. And then on the 6% correction, you have somewhere around 29. So for me, anything breaking below 29 into 28 is a last minute accumulation. And then we have the structural and technical level of the 382, which still holds a higher low structure. And seemingly by the next couple daily closes, we could have this 200 exponential and 55 simple tapping down around those levels. So a lot of buying, I'm sure, that'll be happening here if we were to see that initiate, and then based on past data for Bitcoin. Let's go over to Ethereum. ETH continuing to get rejected at this 200 exponential moving average on the daily. ETH not looking so strong, even though a decent buyback, but still lower highs, not breaking structure, and still overall on a downtrend for the year. So we have April the high, lower high, lower high, lower high, and still a lower high. So for me, I keep telling you guys, I want to see a break above this horizontal level that we're getting a lot of trading around. Somewhere around 1900 would be ideal to see ETH break above. At this time, I mean, even with the way that Bitcoin's going, if Bitcoin was to move down to 29, we could even see 1550 again on ETH. It's just weaker now because of Bitcoin dominance. Still buying opportunities to me. I'm going to leave it at that. There's really not a whole lot to say. Just look for your key indicators. We have these 200s sitting above us. That's not positive. When the 200s are sitting above you on a daily chart, it's weakness. And we're not effectively in wolf cross energy just yet. I mean, this little buyback was just following in Bitcoin's footsteps over the weekend. That's not a good bet to make. So yeah, just look out for another test below 1600 on ETH is likely, given a little bit of a correction on Bitcoin. We're moving over to XRP now. And remember, our key level on XRP is 54 cents. Until we could really start breaking above 54 cents, no parties. We're still choppy trading in this range since the recent pullback, about going on to the third month now, effectively over 2 months of trading in below 54 cent level. So just consider that. And we have this 236 below us at 45 cents. I'm not entirely sure if we'll get that. That's why I've decided to accumulate anyways on XRP, dollar cost averaging. I have a big enough position now that I'm not too worried what happens, and I believe we still have a lot of time. We did see a little win for the Ripple case with specifically the CEO, Brad Garlinghouse, and Chris Larson no longer being scrutinized as part of this initial lawsuit that went down of the SEC against Ripple. So they're clear, which is another win essentially for Ripple. But the case is still going. Case isn't over. And that news didn't really bring too much bullish energy because we were effectively trading higher even back in August and still trapped in the same. You see this yellow horizontal line across the screen? That's the level, man. I mean, shit. I keep zooming out and it just shows you how clear this level is of 53 to 54 cents. That's the level XRP has been struggling with. Yep. So if we were to just explode to the upside, the first initial level we would hit would be 62 cents. It'd be right there between 60 and 62. And for now, anything below this yellow line is still sort of accumulation territory. How low we go in it is deterministic, of course. Let me see if we have another XRP chart. Yeah, so I like this chart right here. I hope you guys see what's going on. I'm going to turn off this and then we're going to move on. We had a little bit of support going from here about 1 month before we broke below it. And then we've been getting rejected on it now, about 3 candles on the wicks. And this could be forming a micro cup and handle formation. Not the cutest looking thing, but with all coins, they never look clean. Not as clean as like an indice or a stock would. But yeah, I would consider that if we can break back above this and then cement another daily high, anything above 54 cents, again, that would be in alignment with breaking above this resistance level plus all of these highs over here. And then that would engage us a move into the 60 cent level again. I'm going to leave it at that. We talked a little bit about Chainlink. I'm going to touch on Tron. Spend some time. Let me zoom out. Okay, got a nice uptrend. It's been going on for about a year. Very good. Okay, this is a huge chart. Let me look at the weekly. We have data going back to the past. Oh shit. Okay, so this is the prior all-time high in January 2018. It kind of pulled an XRP. It did not make a new all-time high in the 2021 alt season. This is more like the silver chart or something, or like the gold chart, where we're in this really long horizontal accumulation range, but we're looking positive because we're staying above the 0.5 fib. That's really nice. So this is a macro Wyckoff we're looking at. Buying climax, selling climax, automatic rally, and so far we're holding. No sign of spring, no sign of double bottom, no sign of, bigger, deeper corrections incoming. So what I'm going to do now is I'm going to look at it from this perspective. I'm going to shift it to a little bit more zoomed in because we are looking at crypto. We're going to have this rally being your buying climax. I would call this your selling climax. And then I would call this your automatic rally. And then here would be your spring. And this would be your test. And now we're moving into an SOS. So now that we have that in mind, anything above 11 cents is an SOS. And it could go something like this. So we'd move, boom, pull back. Or we don't even have to go that high. That low. We could do this, and backup phase could be right here. The reason is because of this. There's clearly something going on in this area. Okay, so yeah, this kind of idea, SOS backup phase, and then boom. And then once you start getting back above that 786 in the macro, that's when I anticipate this thing to start going back up again. Good looking chart, great looking chart. It didn't dip as low as Stellar Lumens or XRP. Now, would I invest in this? No, I would not personally. Interesting project though, interesting color scheme. Anything with red, yellow, orange, I believe will have an interesting year next year, being the year of the dragon, having to do with fire. Could also see some green type of color schemes too, but I don't want to get into that too much right now, take up too much time on our podcast. Let me look at the daily and see if I'm seeing anything. I mean, really just perpetual uptrend all year. Like, what could you say? Bad. It's just, yeah, looking good. Also, I like this W pattern here, a little choppy, but this back test right there is a sign that that's going to play out. So let me show you what I mean. We have our W formation about here to here is my conservative, and then I'm going to pull it up to the neckline, and we're looking at about 10 cents or so. But I think ultimately that would be the move to really break you into that SOS that I was talking about, getting you above that 702 fib. And if I wanted to look at the extremes in the data, I would turn it off of log and put it on linear. I'd pull all the way down to that wick, and I'd pull all the way up. And yeah, you're breaking into pretty much same. And there's a shortcut. If you press Option L on a Mac, you could switch between linear and logarithmic, so you know. So yeah, I'm going to leave it at that. Shared the macro SOS theory as well as the micro SOS concept, with this being your buying climax, selling climax, automatic rally, spring right here, test, and then now breaking into a recovery phase. It's just the ending stages of an accumulation schematic. Hope you guys enjoy these sorts of breakdowns. Now we're looking at, okay, this is osmosis. All right, we're not able to spend too much time on this for obvious reasons. We have the chart starting in April 2022, a little bit over a year moving into 2 years of data. This thing is effectively in price discovery to the downside. It started at around $9. It quickly shifted to 80 cents, just in a straight line, choppy sideways for about a year almost before continuing onto this slow, dreadful shift to Hades. Okay, I'm going to pull a bearish fib from this level right here down to the current high, and that shows us we could continue down to 15 cents. Yeah, don't touch this thing with a 3 million foot pole. This is not safe. These are the sorts of things that you can't really determine when it'll stop. We're doing our best here, showing that around 15 to 14 cents to the downside is in the cards, but then what are we even investing in? We're investing in something that is launched and then effectively lost 98% of its value with no bullish action at all. I mean, it's just, it's a tough thing to gamble on. I mean, as venture capital, you always look at it as money that you're willing to lose. Like, it's money that you can watch go to zero and you're not going to cry about it. That's kind of what this is, but like, why even risk venture capital when the chart looks like that? You know, I'd rather put my venture capital into stuff like VeChain, Theta, stuff that has proven itself in the past, stuff that in the last bull run went into price discovery. You know, that's the method to my madness. With this, it's very speculative. You got to really be cautious. So I can't say too much about this. It needs more chart history. We have some downside targets to consider for those that are interested, but be careful out there, wolves. Okay, we're going to move over to eHex and then look at pHex, which is hex on the Pulse chain. All right, so you guys know how this all went if you've been following along my work, especially for those that are into the hex token. We had called the selling climax and the automatic rally with perfect precision, then the initial shakedown to 006, and then again the next to this 003 level. Then when we started to get down to these levels, I pulled a bearish fib from this level right here because we had about 2 weeks of horizontal trading before breaking down further. And what I decided to do was pull a bearish fib from this level to this current high in the structure, because again, we also had about 2 months of trading sideways with this rejection followed by continuation lower low. So that was a really good fib to pull, because if I zoom in, look at where the 1618 is and look at where this coin hit last on its lowest before it pivoted out. So if anyone was looking at that analysis, this gave a 50-day opportunity to build some position. I mean, I'm not entirely sure if this is the gamble of the lifetime now that we're down effectively 99.5% from all-time high. So this is one of the biggest historic losses from all-time highs we've ever seen, without something effectively going to zero. It made it to 002. That's pretty rough. So now it's getting this buyback, right? And I'm sure a lot of people are excited. They're interested. There are still many people in the Hex community that are fascinated with this sort of thing. Yeah, so let's just now analyze what this buyback has been like. Okay, so 280% in about 1 week. Very, very explosive. But what we're seeing here is some warning signals. Number one is that it's a lower high. Number two is you really want to get back above the 017 level to show that you're back into at least your selling climax, because everything below your selling climax is the spring. Now, this is not the best performance, because we had an 84% correction off of the fucking selling climax. I mean, oof, that's a lot of retail panic selling, okay? Who could push it back this quickly, that fast? A couple of whales. So I assume some whales initiated this move to about 005, and then right there, that was all just FOMO of retail trying to buy back in. Now, they're probably buying back in lower than where they started to help with their overall position. But it's not the most helpful tactic, because whales know this. Whales know how to manipulate in that way. They know when you're feeling the pain and you're getting prepared to FOMO. So let's just take all of that theory and put it aside and look at what's going on here. If I was to pull a bullish fib, so I have from this swing high down to this swing low. And over here, you see our golden pocket, and you see what we're trading on right now is the 702 fib, and we had a back test of the 618. So if this can hold the 618, then it could continue up for sure. But this could be a micro accumulation phase, actually. So in plain English, this is your local buying climax. We're talking micro, by the way. Buying climax, selling climax, automatic rally, and then your automatic rally leads you right back. And sorry, I shouldn't have deleted that. We have our 236 fib. So why that's important is because anything below the 0.5 is considered the finality of the automatic rally. Gravitating back to the 382 to the 236 is about as deep as you need to get. That could effectively happen just because of how quickly it went up. It could easily as quickly go down. Now, I'm not entirely sure what has set this train in motion for this buyback. Maybe you guys could explain to me. But this sort of volatility is not comfortable. When you're seeing something that drops 99.5% to lows and then just explodes out 280% in a couple days, that type of movement is very immature. It's very immature. So when I hear people comparing this to Bitcoin in any capacity, that's confusing. Sincerely confusing. First of all, there's no time in Bitcoin's chart history where I believe it's lost 99.5% over this long of a trading time, over a 2-year moment. This is not anything like a Bitcoin at all. At all. Yeah, it had an amazing bull run back 2020 into 2021. But since, this performance has been very lackluster and a little bit too dramatic for someone of my taste to be feeling confident in investing in this stuff. And these sorts of buybacks don't make me excited. You guys know Chief Wolf is never happy when everyone's happy. I get worried. When everyone's greedy, I'm like, get out of here. And this type of stuff is just showing to me it's still quite a nascent, infantile mover. It needs more maturity. That's all. That's not me talking shit. That's me being honest and analytical. I've been able to analyze how this price moves with very high accuracy because I have not been emotional about it. So let me get over to P-Hex and see what's happening. So a while back, we talked about a potential move down to the 004 level. We have not gotten that yet, but remember, we need to consider that these things are very high possibilities with new charts. I mean, this thing only has a little bit of data starting back in May of 2023, not even a full year of chart history. Is it possible for us to get to 004 and even lower? Hell yeah. This thing is new. Let me see if we're getting any theme here. I would definitely consider this. A little choppy, but that's kind of what we're working with here. And then we do have that, and that was the break. And we could clearly see automatic rally break off the spring. And yeah, now we're moving into a little bit of rejection maybe in the long term, but I really wouldn't even consider that. It's the 382. So we have the full bullish fib pull from this swing high down to the swing low, and now we're at the 382, and that's a make or break. Why? Because I teach you guys that anything above the 382 starts to become what we consider to be an automatic rally. If that is the case, that this is your current buying climax, selling climax, automatic rally incoming. Well, if we get rejected here early, then that means we have still yet to find the bottom. If we can get above the 0.5 fib, solidify some like 2-day closures above that, then that would feel a little bit more confident. But at this time, to me, this doesn't look like a spring. This does not look like a V-shaped recovery vibe. This looks more like we're just had some sideways, got above the 236, getting rejected here at this crucial level could be some downside incoming after this. So again, let me know what perpetuated this move up. It could be news driven, it could be update driven, maybe something with the code. I'm not entirely sure. Dev team might have shared some updates. Richard Hart might have shared some updates. Again, I don't do research like that. I don't have the time to. But on this move, it does look very driven by something and not natural at all from speculation. It's just initial speculation off of some idea of some changes or the assumption of changes, and then it comes back to reality very fast. So I'd be cautious here with these sorts of things. And again, I'm not telling people what to invest in or why they should invest in anything. I believe the Hex community knows exactly what they're getting themselves into, and this isn't me trying to suggest otherwise for them. Continue to trade your plan, do your research on what you believe in. We respect that around here, regardless of what projects you're into. But yeah, this is looking like another warning sign, just another lower high, very explosive move. After this many days of green candles, you typically have a little bit of a pullback. The initial pullback target for PHEX would be 009 right here at the 236, and then we'll have to see how it acts, because this was effectively a 80-day horizontal resistance, which you would typically get back tested to prove that it's become a new support. Until then, it's still a resistance, and this could be a kickback where it just comes right back below the 236. So initial target to anticipate is that 236 level. And then on EHEX, it would be around this 0.5 fib. Now, if it breaks below that, this level right here, 0.005 cents. If it breaks below that, lights out. So yeah, this is very not super confident for my liking. Let's move over to Aleph 0. A 0. Okay, so we looked at this a while ago. I'm going to show you the long term. Oh, this is a very clean Wyckoff. You have buying climax, selling climax, your real automatic rally, which got you right into the 702 with this like Christmas tree vibe. Then breaking below the 0.5 fib. This is what I tell you. You come back up to the 618. Those two rejections right there were a GTFO symbol. Like, get the fuck out of here. Right there, when we started to break below it, back to the 382, AR completed. Now that the AR is completed, these breaks below the 236 is not good. So this means that we could be moving into a spring. We have our double bottom targets down here at 60 to 63 cents. That's most likely where it's headed. And then if it springs out, you just have to like hope for the best. I'll show you the best we can do is I'm going to pull a couple of fibs just really quickly. Yep. Okay. So we've already initiated that target. Now let's go to here. So this shows me that we're close. 68 cents would be the next target. And then if I was to go even deeper, it would be here. So I think that's where your spring would take you. Let me zoom in so I can show you guys what's going on here. So you see we have this one wick, double bottom, test, lots of trading here, and then some rejections before continuing down. That's where I have my swing low, and my swing high is just the top of the automatic rally, which is putting my 1618 around 47 cents. It's a little bit more advanced way of using the fib pull, but I believe it's super helpful if you guys see me use it in stages like that. So yeah, let me just put another line down here at 47 and give you guys this idea that it's potential next big level to the downside if the double bottom does not hold. So the double bottom is possible. I would be very cautious investing in this because it has no chart history before 2022. So this is super speculative. We never saw how this thing traded before the C19 crash, into the C19 crash. It's like you're betting on something that has just been launched at the right place at the right time. I mean, but based on the chart, it's only 81% down. That's like as good as ETH pretty much. The automatic rally was stellar. I mean, damn, went up about 200% during what was a bear market for a lot of other things. And then it's been holding this horizontal trading range now for over 2 years. Horizontal trading range for 2 years. It's looking like Binance, like BNB token. It's great. We look at a lot of charts and we see 95% losses. We just looked at EHEX. It's a 99.5% loss. But this project, we're only looking at about an 80% loss total, and we're holding structure. Your lows are all the way back here in June of 2022. I mean, we just looked at the HEX chart and we're seeing perpetual lows just over and over again, and very lackluster automatic rally. So, I mean, this is never about comparing. This isn't me shitting on one project to promote another. I don't care. I don't hold Aleph Zero. I don't plan to. This isn't this type of stuff that I'm attracted to. And I explained my big caveat. It's because there is no trading history before 2020, before that C19 crash. I don't care to bet on that, especially with this environment we're in today. A dot-com bubble scenario is very, very likely for speculative altcoins at this time. No regulation. I mean, it's like the Wild Wild West, especially with stable coins being part of the conversation. So I like seeing charts like this. It helps me get better at TA. It helps me kind of see what's going on with these projects that aren't as popular. It makes me a better analyst. It makes me a better decoder. It makes me just overall have more charts that I've looked at. It's part of that like 10,000 hour theory. But yeah, it doesn't mean that I would put this into my portfolio. But yeah, looking pretty good. I gave you some of the targets to consider. More likely in the downside because it's breaking this support over here and a technical level of the 236. Double bottom is in the cards. Anything below 59 cents is a flash down to 47. And that would be an ideal level to consider. All right, let me get rid of some of this, and we're looking at compound, and then we're going to wrap up today's episode. All right, so we have our buying climax sitting here around $912 for comp, and a pull down to a 97% correction. So again, kind of just cements what we were talking about moments ago. I'm going to pull a fib from here up to the swing high. Okay, yep, so we've gotten it perfectly. You see what I did from the swing low up to the swing high, a bearish fib pull. We got perfectly into that 1618, so that's effectively targeted. Let me see now. We got about a 1 year double bottom, looking real nice. Got this shoot up, but still continual rejections. So we've already effectively hit our downside target at 24. Let me put a horizontal ray here to just mark that out. Let me try one more idea. I think that's it. Now this is if this thing slides again. Okay, I'm going to delete that now, and I'm going to pull a bullish fib from our swing high to our swing low, like the cool cats do. All right, anyways, so we got the 236 rejected below the 382. That's not a sign of strength. So what does this mean? Well, we want to get above the 382, above $100 effectively to initiate an automatic rally. Also, this did not trade before the C19 crash, so I wouldn't personally be putting too much bet on this. We don't know how it could react to a black swan. And I think that this could go to the 702 fib in the next cycle, but I'm not sold on the idea that this thing will break into price discovery. If anything, just price discovery to the downside, which is what it's currently on. Because if you look, this was your launch price, and this was the price you got back in a year later, and then almost another year from that day, these are perfectly timed out in like July too. Look, June into July, June, fucking June. This is insane. Comp just loves the month of June. Gotta love when you recognize patterns. So this coin doesn't like that time frame. It tends to get low. Oh shit, moving into June, pretty much we topped out too. This all-time high. Brilliant. All right, so yeah, I'm going to leave it at that. We have the theory that these types of projects, I wouldn't put too much of my speculative capital into them unless I'm willing to lose it all, because this is still in price discovery to the downside with no bottom in sight. You really don't know, because if it was to slide below this level, well, you do have another level to consider, but it could do the same thing. Chop sideways for a year, go another leg down. It's not riding the wave of Bitcoin, right? Because Bitcoin is moving up right now. You could see that. Bitcoin is in the process of going up. When we zoom out, we see up in comp, we see sideways and mostly down. So until we get through the next Bitcoin halving, that's really when you want to be a little bit more conservative on making big investments on these speculative alts. After the Bitcoin halving, you can have a lot more fun. It's like monkeys playing darts. So I'll leave it at that. While comp is trading at $44, we're moving into the 44th week of the year. Next week, we have the big FOMC meeting happening literally a week away from right now. We have the lunar eclipse that'll be during the time of our next Red Pill podcast. Hopefully next week we'll be back in action doing the live stream and get this podcast out next Sunday instead of having it come out a little later like it was today. Just had some personal things to take care of. Appreciate your understanding, but we still got the podcast out regardless. I appreciate every single one of you. I'm wishing you all a beautiful rest of your week in the Matrix. Much love.